Hey guys, what is going on? Welcome to the video. So in this video, I'm going to be going over 3 stocks I'm looking to buy and trade this upcoming week, giving my thesis on each trade, giving my stop loss and target levels, and upcoming catalysts that I'm watching. And of course, none of these should be used as buy or sell recommendations, just ideas, and I'm sharing what I'm personally doing. Always have your own plan behind every trade you get into. Alright, so getting into it, the first stock that I'm buying and liking a lot right now is the Gap, ticker symbol GPS. So this is about a $24 stock right now, market cap around $9 billion. It's taken a very large dip recently, down about 35% from recent highs, and in my opinion is setting up for a reversal very, very soon. So first up, taking a look at the technical setup, the stock is coming into a strong range support in between 23.6 and 25. So 23.6 is the next key level that I'm watching to hold. If it was to break below that, the next spot I'd be watching is 21.5, which acted as that key support level in between 2015 and 2017, which would likely act as support once again. It's also oversold now on the daily chart. Last time it was oversold, it bounced from $27 up to $30, and now it's oversold once again, which does not mean it has to bounce, but it does make it more likely. Oversold can always become more oversold, but it makes it very likely to see a relief rally. So why I'm personally very bullish on this stock right now is they recently blew out their earnings estimates, revenue beating $4.21 billion compared to the expectations of $4.12 billion, large beat on EPS as well with 70 cents earnings per share compared to the analyst consensus of 43 cents, and they also raised their guidance in a big way, estimating in between 210 and 225 yearly earnings per share, and the prior estimate was 160 to 1.75, which in my opinion Wall Street is overlooking these numbers big time. The current trailing PE is right around 12. With that new outlook, it's going to be in the low 10s, so that's lowering it even more, and their forward PE is expected to be 9.5 with that guidance raise. If they raise it once again, that could easily be below 9 within that range, so trading on very, very cheap fundamentals with a big growth opportunity as well. With the new Yeezy Gap deal, which was signed last year, it's finally starting to drop, and when the Yeezy brand starts dropping more and more items, that is going to be a huge brand mover for Gap in my personal opinion. The first item that he dropped was along with his album release, and this was a $200 jacket available for pre-order and shipping sometime in spring 2022, and on StockX where clothing items are resold, all of these jackets that were dropped are now selling for a minimum of double the retail price and triple for a couple of these. So once the brand starts dropping more and more items with Gap, these are going to be in high demand, game changer for the business. So on this trade, which I'm looking at as a midterm swing trade or so, I think the holiday season will heat up with this brand as well. I'm targeting a move to $30 plus, looking for a balance within this range. If you want to play it safe, a good area for a stop loss would be under that 23.6 level, and if you want to give it some more room would be under 21.5, whatever your risk tolerance and your thesis is on the trade, but that's the levels I'm looking at and the targets with this trade. The next stock that I'm buying right now is Joann Inc, ticker symbol JOAN. So this stock IPO'd not long ago, recently took a big dip after an earnings miss, which we'll look at in just a second, but a market cap currently valuing the company at $440 million, and is a stock that trades at some of the cheapest multiples in the market as a whole. The forward price to earnings ratio is trading below 4, price to sales 0.17. And now a big reason why those multiples are so low is because they do not have a great balance sheet, only $22 million in cash while having $1.72 billion in debt. But overall, it's a profitable company. The business is not going anywhere anytime soon, and just recently had a big earnings overreaction, which is bringing up a big buying opportunity in my opinion. So in the recent earnings, the missed estimates in a big way, with EPS missing negative 20 cents compared to the expectation of negative 14 cents. They missed revenue expectations as well, with expected at $533 million and only reported $496 million for the quarter. Which that revenue number, even though it was a big miss, that is still larger than the company's current market cap. So with this big recent earnings miss, they attributed this in a big way to supply chain issues, which has been a common theme with a lot of these earnings misses, but Joann said they had to pay as much as 10 times our historic average container rate, which obviously is going to contribute to disappointing numbers, and also their Q2 numbers typically represent 10% or less of their annual adjusted EBITDA. And this is a business that is very seasonality oriented. They're coming into their strongest season now with fall time. Halloween and Thanksgiving are both big drivers for the company. And of course, the holiday season with Christmas coming up at the end of the year, that is always the biggest driver for companies like these. And in my opinion, leading into those holidays, this is where this stock is going to see a big bounce back because the expectations are already so low for this company moving forward. Also, a big reason for the recent drop was that there was a lot of fear leading into September 8th which was the lockup expiration where insiders are allowed to sell their shares. Now that date has passed, there were no insider reported selling, and there's only a history of insider buys in between that $11 and $12 range. So this is just telling me that insiders believe that their stock is undervalued. Now taking a look at the technical setup, it had that big drop in earnings, dropped some more leading into that insider lockup date. Since then, it has started to bounce back slightly, still low and still has that huge gap to fill up to 12.7, which is going to be my target on this trade. The key support levels to watch is that $10 level and 9.75, which is the past all-time low out of my stop loss below 9.75, and overall targeting that gap fill up to 12.7, which is a little bit over 20% reward potential if this gap does fill, which I believe it will in the coming months. And with the strongest seasonality coming up for the business, I think that is when the stock's going to start moving, and that's my plan on this trade, really liking shares in the low 10s with that tight stop loss of 9.75 with that big gap fill target level. Okay, so getting into the next stock, this is the one that I'm watching right now and not buying yet. I want to see how this pattern plays out, but this is Spirit Aerosystems, ticker symbol SPR. Now this is a travel play. They supply a lot of aircraft parts as well as maintenance, repair, and overhaul services, and has historical highs in the past of over $100 per share. So getting into this play, it's mainly a technical setup play, nearing support and setting up in this falling wedge pattern. So the play on this is looking for a breakout and reversal out of this falling wedge for a big move to the upside to $45 plus. This is a stock that I talked about a few months ago in this past falling wedge setup, which played out perfectly, getting that falling wedge breakout and moving from the low 40s up to a high of $52 per share. Looking for a similar type move on this falling wedge setup if it does play out right. Now on this one, watching for a downtrend break back above 40 for an entry, and stop loss on this one and looking for $37 as support to hold. If 37 was to break, I would get out of this trade and wait for a re-entry in the $33 range, which is the next support to watch. But this is a close watch for me right now as a pure technical setup play, looking for this pattern to repeat as it did last time for this falling wedge breakout, and targeting a move up to the $45 to $50 range. And before I close out the video, I know there's going to be complainers in the comments about what I talked about last week, which is the MSO sector. The sector continued its dip this past week. The triple bottom setup was invalidated, but once again, I do not care what happens short term with these companies. This is a long-term play for me. And I have my full thesis on each one of these companies coming out soon in a video with myself building at that portfolio. But once again, these are long-term holds, waiting for that catalyst, waiting for that thesis to play out. No short-term movement is going to be worrying me on that trade. If you're worried about any short-term movement down, you should not be in any long-term trades. Once again, that is a long-term play around that couple month to 1 year plus time frame, like I said in the video. If you're worried about a week after movement, you should not be in a long-term play like that. But I'll have more out on the sector soon. The lower these things dip short-term, the better and more profitable we'll have long-term with that trade. Okay, so I hope you guys enjoyed this video. Make sure to let me know in the comments down below. Like and subscribe if it did provide some value to you, and I would greatly appreciate that. If you are interested in joining the private Discord chat, the link is down below. You get alerts every time I buy and sell a stock, answer any questions you have. You have full access to my short-term and long-term portfolios, and more, so that's the first link down in the description. Thanks for watching, guys. Make sure to trade smart this upcoming week, and let's get rich.